Hello and welcome to LiveSquawk's Market Talk. This is our recap show today, and we want to try and do this regularly on a Friday, just to go over some of the market moving news that's affected traders during the course of the week. I'll be joined today by Sam Cutler, Portfolio Manager at 333 Capital. And before we get into it, just a quick disclaimer. The content provided on this channel is for informational and educational purposes only. We are not licensed financial advisors, and none of the information shared should be considered as financial, investment, or trading advice. Please conduct your own research, consider your financial objectives, and consult a qualified financial professional before making any investment decisions. Investing and trading in financial markets carries risks, and past performance is not indicative of future results. We are not responsible for any losses or gains that may result from following the content on this channel. Okay. Over that out of the way, let's take a look at what's moved the markets this week. Quick look at some of the key points then. We had US non-farm payroll data out a short while ago. We'll have a look at that in first order. FOMC minutes midweek with the Fed not for changing, according to analysts. ECB rate decision was out yesterday. Hawkish cut. Lagarde quote of the day. Monetary policy was well positioned. We see latest we'll talk about latest US trade deals, and then we'll go on to the real juicy one. Trump and Musk public spat. Does this damage the president's bill? And what are the positive negatives of the row? So where to begin this week? Sam, thank you for joining me on today's show.
Yeah, thanks for having me here. Happy to be here.
Brilliant, thank you. Well, we'll get straight into it because we haven't got a whole day to go through everything, so we need to sort of crack on. If we start with today's non-farm payroll, any views on what we've just seen in terms of?
Yeah, so I mean, I was actually pretty far off on this one. I was expecting us to see a print sub 100K, pretty left tail, but this market just remains resilient. But I've always these headline numbers can be pretty deceiving, and I know that's just going to make me sound like okay, like I got the forecast a little wrong, so I'm looking to validate my points. But this has been kind of an ongoing trend where you look at all the negative revisions, you look at the household survey. So we did get 140K headline print, 20,000 above the consensus. Relatively very strong number, shows employment, really nothing to worry about. But if we look at April and May, those were still revised lower by about 125K. So the net payroll gain over the last 3 months is really only sitting at about 14,000. So that's not fantastic. And the household survey showed a fall of about 696,000 in employment. And to accompany that, we also had a drop in the labor force.
So, yeah, ultimately, I mean, I'm looking through some of the bank reports on today's number, and I've got a note here from, who's this? This is from ING, and they are actually quite optimistic, upbeat about it. They say decent US jobs market, vulnerable to trade uncertainty. Well, isn't everything at the moment, so it doesn't really narrow things. But they say, on balance, a pretty decent outcome given the weakness seen in the employment components of key business surveys. But risks are increasingly skewed towards cooler jobs growth in the coming months. Again, that's a theme we haven't really veered away from in recent months anyway.
No, and I think part of the thing you have to think about too is the whole Doge program too, right? Like, I'm not yet sure if we've really seen that fully kick in, because there's these big long severance programs that these employees get, so they won't come up in that until the severance programs end. So this may be pushed out till Q3 or Q4, right? Because if you look at federal government employment, it declined by about 22,000 and is down about 59,000 since January, right? But we know that the Doge cuts have been much, much larger than that.
Yeah, and we've been waiting a while, like you say, for these to come through. I mean, government jobs, I think they lost 1,000 overall, I think, in this month's print, the May print. So, yeah, I mean, when that kicks in properly, I guess then we've got more issues at hand. And
exactly.
That may well force the hand of the Fed.
Yeah, and the way it's calculated, too, like if the employees are on paid leave or receiving ongoing severance pay, they're still counted as employed in the establishment survey.
Right. Okay. That's good knowledge. Thank you for that.
Yeah.
Yeah. Go on. So, yeah, you're saying.
Oh yeah, I just think so. Then, like, I think we are seeing like this is just prolonged till we see the full effects of these labor markets, and I think that's why it's very important that you can't just look at one thing as a whole, right? You can't just look at the non-farm payrolls and say, okay, this is the picture of U.S. employment, right? You have to still continue to look at those surveys, at those at commentary out of corporations, the small business surveys. You have to kind of take all those pieces together and just look at it like a big puzzle and try to build it together. Because like we were talking about earlier, there's so much headlines going on, so many things that shouldn't matter in the markets that are driving the markets, like the Elon Trump breakup. The biggest reaction of the week in assets was on that. Like it shouldn't be like that. And at the end of the day, I believe that, the macro forces will eventually play out.
Yeah.
And it's just putting that puzzle together and really trying to position your book for what you think is going to come to fruition with that.
Yeah, very well said. Next on my list, I've got FOMC minutes. Fed is not for changing. We're looking at continued hold pattern for the US central bank at the moment. No real surprises, I guess, on that front. But today's jobs, do you think today's job number would make any difference really to that?
No, I think it keeps them right on path, right? Like they've said deliberately that they want to know the impacts from trade policy on inflation before they do anything, right? And I believe last time we spoke, I said it's going to take a couple of really bad non-farm payroll reports, I think, for them to focus on the labor market and say, okay, labor's cracking, we need to cut rates. Right now, they're in a pretty perfect zone with inflation coming in lower for now. The only stress I see is the fact that real rates have been above 2% for an extended period of time, and that eventually is going to cause some hurt in the economy, I would think. I may be wrong on that, but I think that's a risk to them staying in this rate range that they're in now and not, just easing as inflation has come down substantially since kind of the high point.
Well, again, I've got a note from Bank of America here. I'm going to go through different bank research notes anyway. And they say soft data flow in May so far is consistent with their Bank of America's model through outlook. They say the question is whether it is the start of a more meaningful downturn. But this, Bank of America doesn't think so. They say robust income growth should support spending and large-scale layoffs seem unlikely with tax cuts around the corner. I mean, there's a question mark over that right now. So this is all on the proviso. If there is a recession, it will likely start in the next 3 to 5 months. They said, watch the U rate above all else. If we muddle through, the narrative should shift to reflation. So they're taking a more optimistic view of this inflation and prices aspect of the US economy at the moment and the general activity. So again, it's wait and see mode. We, this uncertainty, and it can't, it's never good. We know this phrase that, markets don't like uncertainty, and we're treading water constantly at the moment, it would seem, from comment to comment as well as from data point to data point on that front. So interesting. Right. So the FOMC, this backward looking, so we'll move on from there. Yesterday, we saw the ECB cut interest rates. It was a hawkish cut. And the one comment that we heard from Lagarde more than once was monetary policy was well positioned. And that kind of sent markets into a bit of a tailspin, framing that as a hawkish cut from the ECB chief. You got any views on, just brief views on the ECB?
I mean, I listened to her speech, and I pretty much took it as she's, she pretty much endorsed the fiscal spending during her speech, right? So it pretty much seems like it gives the green light for the ECB to continue to push measures that support growth and keep inflation around 2%. So basically, I took it as she's saying rates can stay where they are, but go spend money to help the economy.
Yeah, very well.
I mean, for me, the markets are still pricing another cut out of the ECB. So, I mean, look, maybe it's worth taking a shot, on, some December Euribors on the short side that the market takes out that last cut. Or, maybe even it pushes some cuts out into, December 26. You look at, kind of some flatteners in that part of the curve.
Well, I mean, they've only got one mandate. Their mandate is inflation, but they do obviously have a pseudo mandate of looking after the economy and ensuring or helping to ensure growth. But we are looking at a near-term disinflationary period for the ECB or for the Eurozone. I think they're looking around 1.6 with a forecast potentially dipping to 1.5 for this year. So there are issues around that and whether they may need to do a little bit more than they should be. But she again reinforced that narrative yesterday that we're nearer the end than the start of rate cutting cycle for the ECB. And again, I think that was reflected a little bit in what we saw post meeting. Eric Culp's piece is up on our website, LiveSquawk.com, just giving a reaction to yesterday's ECB rate decision. But as I said, we're in a fast-moving environment at the moment. So again, we are looking at other things. And that leads me on to the US trade news this week. We've had murmurs. We've had secret talks. I know yesterday there was Canada. We heard that Canada and the US have been in secret talks. And President Trump was or the White House was quite upbeat about the likelihood of getting something done. But aren't they always on that front? All this chatter around Musk and trying to get this bill through now, it's just drawing attention away from what they really want to do, which is try and secure some trade deals, with they being the administration at the moment. Any views on that?
Well, I think you also just see it like, I don't really know what's coming with this. We have still yet to get anything really substantial, right? We have the UK deal, but every day we hear war in talks. There's great deals on the table. Trump gave countries that deadline.
Yep.
We haven't really heard too much on that. There's nothing concrete coming from it. And you can see that the markets have kind of started to push that off to the side. They're not as reactive on tariff headlines or trade policy headlines as they were, let's say, in May and April. So far in June, I've noticed there's very muted reactions. Like even the Z Trump call the other day, like the market had a little spike, but couldn't really sustain anything. It just faded right back off. So I think we're now in a regime where talk is talk, and we need concrete deals done for us to start pricing that in. I think right now we're at a place where a headline comes out like that, you're going to get, maybe a little news-driven algo reaction, but you're not going to see real position building anymore around the possibility of a tariff deal.
Japan's Nikkei is reporting that competing views among Trump's advisors have delayed efforts by Washington to strike a deal with Tokyo. One source said that at one point, Lutnick, Greer and Bessent put the talks with the Japanese delegation on hold and began debating right in front of them. That's not great. Let's be honest. This is all really just taken away from... and like you say, we're moving more on what will be our last topic here, on gossip, really, and a public row over what really should matter to the American economy and the American people and the global world, really.
The whole Trump-Elon thing.
Yeah, let's get on to that, because that's what we're really here for.
I mean, that's what's moving the market.
Right. So if anyone has been living in a cave, and you'd have to have been, a row blew up yesterday between President Trump and Elon Musk. Now that Elon Musk is no longer working with the administration on Doge, and it's kind of blown up on social media. There was a bit of critique of the president and his tax bill that, as we know, with President Trump, never goes unnoticed. And he hit back at Elon, and the row has just gone on from there, really, across social media. There was a little effort, I think, by Musk to try and dampen down talk of dismantling some of his key infrastructure projects for the US. But what does this do for confidence in the US at a time when that's already being tested at the moment, Sam?
Yeah, I think it just paints a really bad picture, because they're doing everything so publicly too. Like, it would be one thing to part ways, have a phone call, discuss things, but they're making it so public and they're going tit for tat. Trump's like, oh, we're going to take away Elon's government contracts. And Elon goes, I'm going to disassemble the Dragonfly rocket ship. So it's like, it just adds in that Trump is, like Charlie McElliott says in a lot of his notes, he's like the human VVIX. He's all of all. He creates volatility in the markets. He acts as a gamma agent. You can't take any of this. I'm gonna say I don't think you can take any of this really seriously. Like, markets should not move on two grown men arguing.
No, totally agree.
To be honest, like, who at the beginning of all this thought that this wasn't inevitable? Who thought that Trump and Elon, with both their personalities, were going to have a long flourishing relationship?
Yeah.
I think it was just a matter of time. To the extent of what happens, I don't really know. If I had to put money on it, I think it's going to simmer out quicker than we think.
Right.
But, I could be on the wrong side of that. I mean, you see Tesla stock getting absolutely murked. I think the question here is, now, does Elon try to go more on the Democratic Party?
Well, that would be something if he were to start funding Democrats now, really, because he didn't get his way. I mean, I've heard commentary though that both the president and Musk can get their way if they really just sit down and talk, not necessarily together, but if they sit down with the Republicans and hash this out, there's a win for both within this bill. Again, I guess we need another hour or two to discuss the political ramifications and what this does to the current bill. But some are saying it does. I don't jeopardize is probably too strong a word, but this could just delay getting the bill through in its current form, or anywhere near its current form at the moment.
But I don't think you have a chance of seeing that bill pass until end of July, beginning of August.
No, and that's just, again, more time that really just detracts from other matters of state, I guess, for the administration at the moment. And to put this into context with the markets, obviously, yes, we saw Tesla's share price tank last night, some 14%. I think 18% it's worse, and took off billions from its share price. But like you say, these things tend to be fleeting, and I wouldn't be surprised if we see some sort of rebound in the or some.
Yeah, I mean, you look at the stocks. It's almost trading back above $300 again this morning.
So no harm, no foul.
So you also have Trump coming on the wires now too, urging Powell for a full point cut.
Again, he might want to look at ECB's Lagarde in terms of his next chair, seeing as there is a chatter around her future and her tenure through 2027. She finishes.
Yeah, there was talks about maybe going. Is it the IMF?
Yes, it's the World Economic Council, I think. I think so. One of the
I vaguely heard about it.
We discussed it yesterday on our ECB show, and I can't remember what it was. But anyway, so that's only going to be heat up sort of debate around Powell. He's not going anywhere. We know that he's tenured. He doesn't finish till 26, does he?
So, 26. His term's up,
and he wants to see out his term. So there's whatever Trump says right now will have to fall on deaf ears, because they're not going to move at the moment. They've sort of said as much. The minute said as much. Today's jobs report doesn't really move the dial on that, as we discussed already. So just one to continue to watch. Just looking now for next week. Obviously, we've got CPI inflation data out of the US, and the report should show moderating tariff effects on. We didn't really see a lot of. We didn't see
a lot in the last one. I actually think this is the inflation report that we're actually going to see a little bit more. Like, I've just started to go through a little bit of my data. I don't have it all yet, but I core is going to have a little uptick. Like, if you just kind of do a quick bottom up analysis on potential CPI right now, I kind of see core coming in at that 27 bips unrounded. So that would be rounded to 0.3 month over month on core.
Okay, good. Well, that's again, obviously that'll be the feature of next week's sort of US focused economic event. But no doubt we will hear more from the president and more from Musk. Hopefully they'll have sat. I mean, I know that Trump has no plans to talk to Musk today, but who knows?
But isn't that the funniest thing now too? We're getting headlines: Trump and Musk, no plan for phone call. Like,
Yeah.
I mean,
It's along the lines of Harry and Meghan, if you ask me. So that's
oh,
what
sidebar here. Did you see the tweet from Ashley St. Clair to Trump saying, if you need breakup advice, let me know?
We shouldn't laugh, but you take the fun where you can find it.
Exactly. How else are you going to get through this without a little bit of humor in it, right?
Well, otherwise you get a lot more grey hairs. Okay. Well, listen, Sam, thank you very much. It was great to have you on, and hopefully we'll get you back for a few more reviews over the course of this year. But I really appreciate you just going through the past week, and there's been quite a lot of it.
Yeah, anytime. I enjoy doing it. Helps me as well because I get to organize my thoughts a little bit. And right now that's needed in this market.
Exactly. Well, this is what this is for. Hopefully we can sort of bring a little bit of clarity to our audience and give them just some of the things we're looking at and focused on over the course of a week. So, yes, thank you very much for that.
Yeah, always a pleasure.
Cheers, my man. Bye-bye.
All right, have a good one.